Hi, I'm George Nordhaus, and welcome to Monday morning's Marketing and Management Basics. What's that all about? Well, we'll tell you about that later on, but for right now, we're going to be talking about something that every person or every one of our agencies handles, does, sells, and that's, of course, automobile insurance. But why the basics? Well, I can tell you about that. I started working with Bart Baker. He's an agency he has his agency in Malibu, one of the top agencies. Well, I'll tell you about him in just a second, and Malibu, California, that is. And he's quite an interesting guy. He he knows this business like you can't believe. When I got to talking to him, I said, "Oh my gosh!" Let me tell you a little bit about Bart before we go any further. He is one of the most successful agencies. He's a farmer's agency, and I know that's rare for us because we haven't had a captive agency, if I may say that. Let me ask something, Bart. Did they ever say captive agencies or direct riders or something? The farmers people.
Well, well, as far as that terminology, yes,
Yeah.
we use that terminology.
Yeah, I didn't want to be insulting or anything like that.
No, not at all. George, I think that everybody is pretty, they know what you're talking about when you
Yeah,
use
I
when you
think
use
so.
those
I
when you use
think
those
they do
words.
too. I agree with you. Uh, what what uh, what we what Bart and his wife run this agency, and he was a he was a fireman for the first 25 years of his existence. I mean, his business. There's another story there, which we'll tell one of these days as we go forward here. But he has really been successful. He's one of the top agencies in the country for farmers now. He's been on the President's Council. He worked his way into that, and he'll tell you about that sometime too. Core to the table and top of the table, $1 million round table. How's that doing? This is an amazing bunch of people, and I've gotten to know them over the last few months, and it's just really been a pleasure for me. The interesting thing, he speaks a lot. It has his one of these days, Bart, we'll do your presentations, and hopefully we could just open it up to the world, or we can do them on, we can do them here too. But you wrote the book. The books turned me absolutely on. I love these books. The first one I read was the If an Elephant Sits on You, You Are Covered. I thought, what the heck is that? Well, I heard about it because a friend of mine, Jim Rose, and also Bart, who owns or runs Lola, Lola, but we'll tell you about that sometime too. Anyway, Jim put us together, and he says, read that book. And all of a sudden, the light dawned on me. When I read that book, what the heck is that about, Bart? Tell us a little bit.
Sure. Well, first of all, George, it's a pleasure to speak with you today. I really appreciate the opportunity to talk with you and to speak with your listeners. I'm really thrilled and honored for the opportunity, so thank you very much.
My
But
pleasure.
the book, the title of the book is If an Elephant Sits on You, Are You Covered? And the title is actually inspired by a true story that happened to my wife's girlfriend's husband, where they were on a photo safari in Africa. And for some reason, he thought it'd be kind of cute and funny to look up behind this giant bull elephant with his camera and take that perfect picture, if you know what I mean. And the elephant didn't think it was very funny and did hit on the guy. The guy, he killed the guy. I mean, it was a
You're
tragic.
serious? I mean, this has really happened.
No, I'm serious. Yeah, no, it really happened. And so it's a super tragic event, especially
Of
back at
course.
the time. But
Yeah.
now time has gone by, and it's funny in the explanation. But what the title has really come to mean to me, George, is that the elephant is a metaphor for the weight of the world. So that if something happens to a client of ours and it's significant, you trust me, they feel the weight of the world, on them at that time. However, if their insurance is properly structured and they give you a call and they tell you what happened, and you are able to lift the weight of the world off of them and transfer it to a well-funded insurance company that just writes checks and makes it all better, I mean, oh my God, it's such a powerful thing that we can do for our clients, and really, it's incredibly gratifying and satisfying, to be able to do that. And the whole purpose of the book is how to structure a personalized insurance portfolio so that your client is never going to feel the weight of the world on them for very long, because you're going to be able to pick up and transfer that weight and make it all better.
Well, you say the weight of the world and transfer it all better. I understand where you're going, but can can the agency of the future, is he really going to be writing or she be writing this kind of basic stuff? Is it relevant? Is it what do you think?
Sure. Okay, well, first of all, when you use the term the agency of the future, I love the term because I honestly believe that for the agency of the future to remain relevant and really be able to thrive, especially in areas where they're trying to commoditize certain products like auto insurance and homeowners insurance now and all those other things, for the agency to remain relevant, they really are going to have to position themselves as experts in each one of these fields, and most importantly, to be able to take care of every single need that the client has. And when I mean every need, I'm talking about, auto, home, umbrella, life, health insurance, long-term care, disability, commercial insurance, all aspects of commercial financial services. I'm not saying we're going to be Goldman Sachs, but we have to be able to take care of, middle market. And I'll share just a brief story of, to kind of bring this all together.
Okay.
And I'm sure that every, person listening to this that's been around for any time, takes calls from clients at time that are calling in for a particular line of business. And we take care of it, and we start to build that relationship. And pretty soon we ask them, so what are you doing about, whatever else. So let's say they come to us for a disability policy, and we say, okay, so what are you doing about your auto and home? And pretty soon we take care of that, and we find out that they have commercial insurance, and we take care of that. And we end up getting every line of business that that client has. But the reason we did was that whoever they were doing business with previously did not serve a type of business that the client was looking to get. So in this case, disability insurance. And because of that, it opened the door for somebody like our agency to go in and take everything that client had with his prior agent relationship, only because there was one single line of business where they weren't able to do it, and in essence sent the client someplace else and said, I can't help you, you're going to have to go someplace else to get it. So we get that constantly. So what is the agency of the future absolutely must do, in my opinion, is to nail that back door shut so tight that we never give the client the opportunity, or reason I should say, to go someplace else and get any line of business that they're looking to get. We need to be able to provide every single line of business professionally, build a relationship, proper review process, and in essence have the mindset of keeping that client for life.
I hear you, and I totally agree with you. I hope the agents who are listening agree with you too. Well, let's talk about, you have I guess a philosophy is the best way I could say it. Whoops, I better go the right way. And excuse me. You
Sure.
have a philosophy about insurance, or that I think we should share about auto insurance now, and we're going to do this on each of the coverages as we go forward. Incidentally, as I mentioned this, bear in mind that all of this stuff that's coming in here to you is outlined beautifully, or it's part of that book that about the elephant that you want to get. Let's talk about your auto insurance philosophy.
Sure, be happy to. So we start with auto insurance a lot of times when we're discussing with the client, but obviously we are not interested in just a monoline auto policy. We want to cover, absolutely all of the client's business. And there's so many times, George, where we meet people, and well, let me back up just a moment. There's two different types of clients that are out there. You have a client that really does believe that insurance is a commodity and that lowest price wins. And those are the folks that do business with, Geico, Progressive, Costco now selling auto insurance. Mm-hmm. And that's just not our client. We're not going to get them if they don't value what we bring to the table. And so on the other end of the table, there's the type of clients that want a professional relationship with a full service brokerage that's going to handle all of their needs, mm-hmm. and put us on the same playing field as their attorney, their doctor, their CPA, all of that. They have all of that, and they have their insurance professional that protects all of their assets, and we provide an equally important, if not more so, position in that pool of professional advisors that client has. So that type of client typically has more stuff to insure.
Mm-hmm.
So a lot of times we meet people that have either a portfolio of stocks, bonds, cash, whatever, or commercial real estate or business. And I find so often, George, that I look at their business policies, and for the most part, they're usually pretty good. They've got, they're structured in an LLC, they've got good liability, all of that stuff. And then we go and we look at their personal lines insurance, and it's typically woefully inadequate. It's lower limits, they don't have the right coverage. And when we explain to the client that if something significant happened, let's say due to an auto accident, that what they have at risk is everything that they own, including their interest in all of the LLCs for the commercial real estate, their business, their stocks, their bonds, everything else.
Mm-hmm.
All of that is at risk, plus 25% of their income for 10 years. And they are leaving this giant back door open to be able to have everything that they've been able to accumulate taken from them just because of improper structure of their personal lines policies.
Got it.
So that is what you could really say is the philosophy, is that when we look at a client, we show them that they are, in essence, a holistic, person that has an incredible amount of opportunity for people to get in there and take what they've got. And when they're done working with us, or people that do business like I'm, prescribing, that they will have a fortress, so to speak, around their assets that is so strong that no outside force is going to be able to destroy, because we take the time to look at every exposure that they have. And because of that, we obviously have great retention. The income to the agency is dramatically more because we have, all those different lines. But more importantly, it's the right thing for the client.
Good. Good. I like it. Well, look at these. These facts are scary here, aren't they? I didn't realize
That's incredible, really.
Yeah, 37,000 people dying. And you talk about this philosophy with these with your people like that, like we're showing up here now. You tell them all this, I'm sure.
Sure. So what gets their attention to begin with is just when you actually let them know what's at risk. So when they're told that everything that they own is at risk, including LLCs, most people think that if they have their apartment building in an LLC, that it's protected. It's protected from something happening within that LLC, within the building, but it's not protected from, example, the car accident. The person that's injured on the other side could take that asset, which
Mm-hmm.
is owned in the LLC.
Mm-hmm.
So when that is explained to them and they get it, that's when the light bulb, turns on, and you don't really have to say too much more. You just have to, show them the light, so to speak. And from that point going forward, they're going to be all ears and willing to listen to what can be done to be able to, bulletproof, what their assets are. So in that slide, George, which side are you on here now? You're on the uninsured philosophy.
The car's the largest areas of exposure to liability. That one,
right,
the big one. Yeah.
Yeah, and so that's I think really educational, for the agent or for the agency producer, to know that. A client a lot of times is going to want to drill down into that sort of detail. It's interesting to tell them, for sure. And they, some folks are going to want to get a lot of that information, but the book, if an elephant sits on you, are you covered?
Mm-hmm.
I found that by giving that to clients, and I've had a lot of agents tell me that they give that book to clients to really bring home, where their exposures are, and that's been, powerful for me. It's been powerful for them, because it's written very anecdotally. There's just, claim stories, what went well, and why it went well, what didn't go well, and what what would have actually made it better. So the philosophy about, coverage is kind of universal in every line of business, but auto insurance, it seems, when we get the big claims, and we've been around now for about 27 years, when we get the really big claims, 9 times out of 10, it all starts with the auto. And it doesn't have to be the guy who's driving the car. It
Right.
could be the person's son. It could have been a buddy that he lent the car to. But just because
Yeah.
they own the vehicle, they have total exposure and liability for it because it's titled in their name.
Yeah, that's a good point. Well, let's look. Here's the philosophy about if you're not the best driver, you're still exposed. I like that because, well, most of us aren't the best driver in the world. Cheap rates, you're talking about
Right.
those two. You must go. This philosophy that you have here, these 3 or 4 slides as we start, are really are really very important for people to. I never had anybody talk to me like this about it. Just never did.
Right. Well, this is right. So this is what cheap insurance, gets you, is that they do have situations where, they call it a named driver policy. So I'm not going to go out and call out any carriers that actually do that, but a lot of them do. We probably know who they are. But they say that if you're not listed on the policy, that the limit of liability, whatever you had, drops down to $15,000. And a lot of people aren't even aware of that. They just see a cheap price and they grab it. So when we are able to bring to their attention the types of limitations that the policy has and how it really is going to impact them, this is where we get out of that commodity cycle on coverages like auto insurance.
Right.
And are able to educate the client that, this is the biggest exposure that you probably have,
Right.
and it's not worth trying to save a couple bucks and
Right.
leave the back door open to everything that you own. And most clients get it. Most clients get it, and they really appreciate the education, and they value the relationship, of course,
Right.
and it just drives retention through the roof.
Yeah, that's interesting. I agree. I hear what I hear you saying, and then there's the carriers, if the residents that are not disclosed and all that kind of stuff. I mean, I just never really thought much about that. I got it flipping there. It seems to me that you're saying that automobile insurance, is not a commodity. Period.
It's definitely not a commodity, and the folks that have that other type of coverage and don't pay attention to it, if something happens to them, what an awful way to find out that insurance isn't a commodity. So remember I talked about the 2 different types of clients, the commodity-based or the one that wants
Right.
a professional relationship.
Right.
So when we have the right type of client, in front of us, we're not gonna, be able to access everybody, but there's enough of those folks that truly want what we bring to the table, and those are typically the ones too that are just great referral sources, and they are able to talk to their friends at the golf club, whatever else, and say, gosh, I met with my insurance guy and I had no idea what my exposures were, and he's got me buttoned up now, and that's what gets the phone to ring like nobody's business. So rather than selling on price, we strictly provide proper coverage and explain to them why and what we've done and how we've structured it, and they walk out of there feeling bulletproof, George. They really do.
I can understand that. Well, let's do this. You in your book, you start talking about all the auto endorsements, and I'm not in this on a day-to-day basis and don't sell it or anything. I'm a marketing guy, and let's talk about the
Sure.
endorsements because I didn't realize that there were so many there. Bodily injury. Well, I've heard of it. Obviously, we know that. But go ahead.
Sure. So a lot of these, obviously are really basic, but bodily injury just pays for the other party that you would have, damaged because of the car, and property damage would pay for, cars and buildings and light posts and fences and, just about anything that car could damage. And
Yeah.
it's crazy expensive how like some of these guardrails are. We've had these single car accident claims, and if somebody takes out a guardrail, you're talking in some cases $100,000. It's insane. So without having enough coverage in those areas, again, it's just where you're leaving somebody greatly exposed. But more importantly, in order to have an umbrella, and we are going to have a future call on umbrella coverage,
Right.
you have to have a required underlying limit, and most carriers want $250,000. and $100,000 for the underlying limit on that on those two coverage items.
All right.
So
well,
that's just the basics.
All right.
So what's the next one?
Collision
Okay.
collision insurance.
Yeah. So collision is in essence just your automobile. So if your auto is damaged by an accident that you were in, that you caused, somebody else caused, as long as the car is moving, you could typically consider it to be a collision type of a claim.
All right, we go to comprehensive.
Okay, and now comprehensive is interesting because comprehensive is fire, theft, wind, water, earthquake, things like that. But it's also like if you hit a deer, if you run over a rolling rock, for example, that's all covered under comprehensive. And comprehensive claims are not surcharged. And that's important because, people pay a lot for their auto insurance, and when they have claims, the rate goes up. But if you have a comprehensive claim, the difference between hitting a rock that is stationary versus hitting a rock that is rolling, one is surcharged, one is not. So they don't surcharge a rolling rock, but they surcharge a stationary rock.
Oh my God!
So that's just advice. I know, it's just those crazy little things.
Yeah,
But
it really is. All right, let's go to the next one. Here is the glass deductible buyback.
Okay.
I've never even heard of that.
Sure. So right. So when we are looking at putting together, pricing for somebody to cover them properly, a lot of folks may be getting a little bump in their total cost of coverage. And so they're saying, well, this is a little more than I wanted to spend. And a lot of cases, what we're able to do is just take their deductible on their comprehensive and their collision, bring it up maybe from $500 to $1,000 so they get their savings there. But then what happens if they get any glass damage to their car? They got a big deductible. So when you throw on a glass deductible buyback, it either eliminates their deductible for any type of glass damage that they can occur whatsoever, or it reduces the deductible down to something manageable like $100.
Uh-huh.
So I could tell you a few years back, my son was at the house mowing the lawn, and I don't know how it happened, but he chipped a little rock with the lawnmower.
Yeah.
And that rock went flying like a bullet right past me. I didn't even see it, and it shattered the side window of a car that I was driving. It was a really nice car, and it shattered it like a bullet, and that was totally covered by my glass deductible buyback. The service came over to the house, put in a brand new window. I didn't have to pay a dime, and it was, it was great. And if I didn't have this minor endorsement, I would have had to pay a lot of money, but because I did, it was a phone call. The next day it was fixed. I was a happy guy.
More you're talking, the more I realize it's not a commodity. I keep saying that.
It's now we're at medical.
It's not a commodity.
Yeah,
Medical coverage is.
Yeah, for sure. So medical is interesting because it can definitely be a redundant type coverage. If you have health insurance, and pretty much everybody does nowadays, you can consider it redundant to have medical on your car. However, it's a nice thing to have if you have guest passengers in your car that might not have medical, or they have a high deductible, because you typically get medical insurance in small amounts, $2,000, $5,000, $10,000. So it's not really meant to cover the big things, but it's going to take care of the little things that your health insurance with large deductibles might not handle. Yeah. And it's not very expensive. So again, it's one of those nice things to have, especially for passengers.
I understand. It is. It's shaking right now, so people really read it. Anyhow, let's go to the next one. Yeah, I see that. I like that. That's fun. Well, here is rental reimbursement.
Okay. So rental is, your car gets into an accident, goes into the shop. Unless you're one of those fortunate folks that got a bunch of cars to drive, you're going to have to rent something. And if you don't have car rental as a part of your policy, you're going to be out of pocket, a bunch of money. So
I thought that was automatic. I thought it was automatic.
It's not automatic.
I
know, it would be nice, right?
Yeah, well, I just thought it was. Yeah.
So when you're putting these together, in the book I reference
Yeah.
that you could create an insurance experience like a fine meal that you could eat in a fast food restaurant, or you could eat in a nicer coffee shop, you could eat in like a gourmet restaurant.
Mm-hmm.
And this, it depends upon like what type of experience you want. And so you can craft these policies to be able to have that same type of comparison. So like on car rental, for example, you can go super basic. You could go $25 a day. It's not really gonna, you're gonna rent a Yugo. But you could also go $100 a day for an extended period of time. So your customer calls you up. They tell you about this accident they've been in. You have the empathy and the sympathy for them. You file the claim, but then to be able to say at that same time that you are going to arrange for a car to be delivered to their home, and they have $100 a day for car rental, so you're going to get them something nice. And you'll arrange for the body shop that you have a relationship with to pick up the car wherever it is, and you provide this concierge type service where they feel like $1 million because of the way you've handled the situation. The only way that you can do that is to have it properly structured to begin with. So if you had a client that had, for example, the $100 a day of car rental, you could have a nice BMW or Mercedes or Lexus delivered to them. And then because of your proactive stance on relationship with body shops within your area, you have the body shop go over and pick it up. So you can create this higher end experience that your customer is going to appreciate and tell their friends about for an awful long time.
I bet so. Because and you being in Malibu, you're not exactly dealing with the poorest people in the world. I bet they like this kind of stuff. What?
Yeah, but George, everybody does though. I mean, everybody likes this kind of stuff.
Those do they? Well, I never heard of this one. Residual debt coverage.
Well, you probably have. So you lease a car, and the minute you drive the car off the lot, the value of that car depreciates dramatically. The minute you find, because it's now a used car. So if you drive that car off the lot and the next day it gets stolen or totaled, you, without this endorsement, would be responsible for the difference between the loan amount of your leasing contract versus the value of the used car, which in some cases could be, a heck of a lot of money as far as the difference. So the residual debt endorsement just pays for that difference, so that you're never going to be out of pocket if you're underwater on your car.
I guess that I just never, I'm learning. It's a learning experience. All right. Okay. The next one is towing and road service. Well, you usually have that with AAA or something. I do. I don't know if that's good, bad, or indifferent.
Right.
But
So AAA is great. However, what I've heard, and I'm not sure if it's 100% true, but what I've heard is that AAA really has the towing and road service solely for the purpose of being able to sell auto insurance. And
could be. I see them advertised everywhere. I guess that's Hartford, isn't it? That does that.
No. AAA is AAA. But they are always trying to push their auto insurance. So if you, as the as the agent for your client, if you're not providing towing and road service, which just about any auto insurance carrier that you would deal with has a towing and road service endorsement. That's typically a really good endorsement. So if you could not give your client a reason to call AAA, and they're going to try to sell them auto insurance, then the better off you are. So towing and road service just handles exactly that. You need a tire, change your gas, give you gas, or tow you to a repair facility. You endorse it to the auto, and you cut out the competition.
I get because we belong to AAA, and I get solicitation. We get solicitation every day or every other day. It's
sure.
I don't mind that. I mean, because I'm not going to take it because I'm I'm insured by agents, and that's my business. But they do. They still.
Yeah, but you're. Huh? Yeah, but you're George Nordhaus. There's a lot of people that are going to say, well, let me see what they have to offer. And if they're super competitive, it's like basically handing that customer over.
I have to tell you, Bart, I still believe that Hartford is the carrier they use, AAA. Well, I don't have to tell.
But at least not here in California.
All right, well, I'll find out and I'll get it straightened. Let's go forward to another one.
Mm-hmm.
We split it up here.
Sure.
Let's go to the uninsured motorist bodily injury. Boy, that goes, I've heard of
Okay.
uninsured motorist. Yeah.
This is actually one of the least understood endorsements that I find when talking to people. So in California especially, because we have so many uninsured motorists and we have so many people that just have these tiny little, $15,000 policies just to be able to remain, legal to drive, that if you get hit by them, then, and they have no insurance, or you got this tiny little policy, you are in essence, out of luck, unless you have proper limit for your uninsured motorist. And when you do have your proper limit, then your uninsured motorist limit acts as if the person who hit you was insured for that limit.
Mm-hmm.
So covers things like medical expenses, pain and suffering, most importantly, loss of earnings. So if you are a highly paid, doctor, surgeon, lawyer, CPA, insurance broker, whatever, and you weren't able to work for a considerable amount of time because of this accident that was caused by an uninsured or underinsured motorist, you will be able to recuperate those funds when you get your claim settled under the uninsured motorist of your policy.
Got it.
But most importantly, George, though, it also acts as funds to be able to pay for a wrongful death suit. So we insure a lot of attorneys, and every attorney that I have maxes out the uninsured motorist limit because they say, first, it is the cheapest life insurance that you could possibly get. And when you look at the cause of death, in the United States, auto accident is, pretty high up there as far as the percentage. So if you have the max of uninsured motorists on your car and you endorse it to your umbrella policy to get it up dramatically higher, then you're walking around where you have, substantial limits regardless of, what the other person has.
Got it.
But I need to add something else to that too. Last year we had 2 claims. It was really an interesting year. The year before last. We had one guy who was walking across the street. It was a doctor, and he got hit by a car. Uninsured motorist handled that. You don't have to be in a car to get the money from the uninsured motorist. You could be a pedestrian on the street.
Didn't know that.
So he wasn't able to practice for about a year. The uninsured motorist made him whole as far as his loss of earnings. And we had another guy who was running along the beach on the pavement, and a drunk driver hit him early in the morning, and he wasn't able to run his company for quite some time. And the uninsured motorist acted as if that person who hit him had a really big policy. So in both those cases, those guys weren't even in a car. And because of properly structuring their auto insurance policy and tying it to their umbrella, they were made whole.
Wow, that's fascinating to me. I had no idea that. I guess there's another one here that we still have, the uninsured motorist property damage. I guess it's like the other one, huh? Only.
Yeah. So all that means is that the full term on that is uninsured motorist property damage collision deductible waiver. It just means that if somebody hits you and they have no insurance, and you actually have to be able to prove that they have no insurance, so like hit and run doesn't count because they could have had insurance but just chose not to stick around. The carrier will waive your deductible and repair your car at no charge to you.
Oh, I didn't know that either. Boy, this has been amazing. Well, I mean, now we've been through a bunch of these. Looks like there's about one more here that we need to talk about. Okay. Vehicle manufacturer replacement parts coverage.
Right. So OEM stands for original equipment manufactured parts. And this is for the person that has a car and they're a car buff and they want to make sure that the only parts that they get on that car are manufactured by the company that made that car.
Right.
So if you got somebody that, he's got this BMW and he's, it's his baby and he wants everything perfect, And if something happened and you didn't have this endorsement on it, and they're starting to put in, aftermarket parts that are made in companies from Taiwan, whatever, even though they're guaranteed and there's nothing wrong with the parts, some people would be quite upset about that if they were not made aware. So they do charge a little extra for the endorsement. It's not much. But when you're talking to your car buff and you're properly structuring the policy and you explain this, you'll know right away who you're talking with, because they're going to tell you, yeah, definitely put on that endorsement versus I couldn't care less.
Well,
So, again,
go ahead. So I just didn't mean to interrupt you. Go ahead.
No, it's fine. So I was just going to say this is just an example where a little bit of knowledge, goes a long way to being able to create a good experience, and that's what it's all about, is the experience. If something significant happened to that client and they call you up, if you could make it just, magically, be fixed and no issues whatsoever, it's great. People are going to love that. But if they don't have enough money for their, to rent a car, and they're getting aftermarket parts, and, it could be a bad experience or a good experience, and we have 100% control over that.
Oh, that's beautiful. It's I think it's basic. A lot of people are going to say that. Oh, George, why are you get so basic? Because this is going to go into the basics section. It's the first one of the new basics program, and I won't describe that right now. That's coming, and it'll be here in November of 2015, and after that, we'll have and Bart's going to be with us on different basics of different policies. Here's his two. Here's the way you can get hold of Bart there on the left of that, and that's his email address. These books are really, really interesting. We're going to be talking using the Breakthrough Insurance Agency one down the line also, but I won't go there now. But you're going to. It's really terrific. I think every agent should have these, Bart. I don't care how big you are. If you're going to be in personal lines, well, even if not, because the Breakthrough Insurance Agency is more than that. But these are two books that if I were running an agency, I would buy them immediately. Like we said there, that one is if the elephant sits on you, you're covered. That's today's stuff, most of it. This other one, it was, of course, the Breakthrough Agency. And you can get that and those on Amazon. Just go to Amazon and write in Bart Baker. And all of a sudden, you're going to get these books, and it's pretty amazing. Well, Bart, listen, I want to thank you for really motivating me once I saw this stuff, basic stuff, to think and get this basics thing going. And who else to be the first presenter but you? It just worked out fine. Do you have any last words for us, or any warnings, or any future here?
Sure. Well, first of all, George, it's really, my pleasure to be able to help you with this. I'm just, I think that the industry that we are in, insurance is such an incredible, opportunity to be able to, I don't want to sound, so out there, but like really to serve humanity when we are able to do it correctly and have their assets protected and their life insurance done and, the right health insurance. We have such an impact on people when we do our job right that it's really a profound occupation, and I'm thrilled and honored to be able to be in it. And if I could do anything whatsoever just to help elevate what we do by these conversations, obviously I'm thrilled and happy to be able to do it.
Well, you can and you will, and I'll take advantage of that wonderful offer. For the rest of you, you should know that the next, even though this will be on the basics program, but for the next couple of 3 weeks, we're going to be showing you the whole basics program. And the first basic is the one that you have just heard. So once again, I suggest to every agent listening that you look at the books, get them yourself. I got them Kindle. I had them, they're not real long, but it's easy and it's good stuff to read. And then I would suggest that you get them for every one of your employees. And it's not a bad thing, as Bart said, to take that elephant book and give it to your new clients. That'd be a good book to put in a welcome kit, I think, and I'm sure that Bart does that. Okay, so for the rest of you, I'll see you again, and thanks again to Bart Baker. But the rest of you, I'll see you again next Monday morning.